Hi there, folks. Hey, let's talk about 2024's tax brackets. Let's talk a little bit about estate planning as well. Maybe even standard deductions we'll throw in there. Well, of course, we'll throw in standard deductions because that's just what we do here. Anyway, hey, if you don't understand how that CPA is calculating your taxes, technically they're not calculating it, their computer program is. But if you don't understand what that computer program is doing, you should understand it. Why? Because then you will understand how you can truly help your clients. Then you can look at the tax return, the 1040 form, for example, and look at 6A, for example, and say, wow, your Social Security, your $40,000 that you're getting in Social Security, 85% of that is being taxed, Mr. Client, Mrs. Client. How can we get rid of the fact that your Social Security is being taxed? Well, that's when we go into these various adjustments, these various write-offs, maybe moving money into a Roth IRA instead of a traditional IRA, et cetera, et cetera. But if you don't understand the flow of this, standard deduction versus itemized deductions, follow CG Financial Group because I educate on this a lot, because this is the type of stuff, along with estate planning, estate tax planning, that will differentiate you in the future versus your competitors. So anyway, here's the 2024 tax rates. These are, I don't know the exact percentage. As I was updating this, I would say 5 to 6% higher. These income numbers are 5 to 6% higher is what I'd estimate, just back of the envelope mentally. That's kind of what my mental notes were, higher than what they were in 2023. So the first tax bracket, which is 10%, goes all the way up to, goes up to $23,200, right? What if somebody's making $50,000? A quick point I want to point out here. What if somebody has taxable income? So this is taxable income that determines your tax bracket. It's not adjusted gross income. It's not total income. It is taxable income after all these little red boxes have been deducted from what you had at the top here. Your taxable income, if your taxable income is, say, $50,000, what does that mean? Doesn't mean that you're taxed 12% on that entire $50,000 or $6,000 in taxes that you got to pay to Uncle Sam. No, folks, that's the definition. This is the definition of marginal tax rates. Marginal tax rates say that 10%, you're only taxed 10% on the first $23,200. Now, if we're talking $50,000, we have an additional $26,800, right? What is that taxed at? That's taxed at 12%. So if you made a gazillion bucks, and if you blend out all these tax brackets as your income has gone through the tiers, you often see that you will have an effective tax rate that your CPA will give you. And almost invariably, it's less than what your top marginal tax bracket is. What is that effective tax rate? It's basically all of these blended out, as well as it incorporates in those wonderful deductions, the standard deduction that most people are getting. So that's what that effective tax rate is. That's what 2024's tax brackets are, and that's how marginal tax brackets work. Okay, so over here on the right-hand side, so let's say you make a gazillion bucks. You make a gazillion bucks, which is more than $583,000. You're married filing jointly, and you sell a house that is, say, $500,000 more than what you put into it, plus the exclusion amount that the IRS allows for. Let's just say you have a tax on $500,000 of capital gains on your home, long-term capital gains. What are you going to pay on that? Well, obviously, you're making a ton of money. You're going to pay 20% plus a net investment income tax, which is new as of like 10 years ago, around a decade ago or so. You're going to pay 3.8% on top of your 20%, right? So 23.8%. So that's real estate we're talking about. It is income on investments, like you sell an Apple stock for $100,000 more than what you put into it. It's also non-qualified annuity income. Has nothing to do with life insurance, right? Well, at least if it's non-MEC life insurance. Has nothing to do with Roth IRAs. Has nothing to do with IRAs. But that net investment income tax, if you make more than $250,000 in modified adjusted gross income, right? So we get back to my little schedule here, modified adjusted gross income, not taxable income, then you are going to pay on that house that you sold for $500,000 above what you put in, plus the exclusion, you're going to pay 23.8% effectively on that $500,000. So anyway, that's the net investment income tax. That's capital gains brackets for 2024. You know, if you only made $20,000 in 2024 and you sold a stock at a gain, you're not going to pay any tax on that capital gain there. Standard deductions, they've gotten bigger. The bigger the standard deduction, the better. You know, I remember a point in time to where I just graduated from college. The interest on my house, when I got that from the bank at the end of the year, whatever it was, $10,000, $5,000 interest that I paid on my mortgage, that plus property taxes, that actually meant something at the time. Because I was itemizing my taxes. I was taking the right lane there, right? Well, since the standard deduction has gone so high, the left lane here, standard deductions, is what everybody is taking nowadays, which means that the interest that you pay on your mortgage, it kind of doesn't matter anymore, at least from a tax standpoint. The property taxes doesn't matter anymore because I would guess 80% of the public is taking the standard deduction, which is why this number is important. It's gotten bigger. So $29,200 for a couple filing jointly. Now, if that couple is over the age of 65, as many of my clients are, for example, they get an additional $1,550 per person, or $3,100 in addition to this over on the left, that reduces their tax liability, right? So we're talking roughly $34,000. So you subtract that right here from your adjusted gross income, and boom, that's reducing the tax bill there. So those are 2024's numbers. One more thing is the estate tax exemption, $13.61 million. And it's not on my screen, I'm just talking here, $13.6 million. So a couple, $27 million, $27.2 million, that is absolutely massive, right? Well, that is going to be cut in around half in the year 2026. So when you think of gifting strategies, gifting strategies should be in play. It's almost like things are, estate taxes are on sale right now, right? 2026, they're no longer on sale. So folks need to gift their assets that they ultimately think they will pass to the next generation before now in 2026. And by the way, what is the annual gift tax exclusion going to in 2024? $18,000. So FYI there, folks. Hope you got a couple things from this video. Let CG Financial Group know how we can help you.